It's time now for charting futures. Let's check in with Abigail Doolittle.
Well, Scarlett, today we are taking a look at a part of the market, that's outperforming a bit, and that is the commodity complex. Let's take a look at the Bloomberg Commodity Index, because what we are going to see here, up 0.6%. This is the S&P 500 futures, well off the lows, but still down about 0.4% on fears that a phase one trade deal may not get done. And the big winner for the commodity complex, interestingly, around those trade fears, oil up 3%, really breaking a losing streak, and behind the strength for oil, stronger than expected U.S. inventories. There was a big drawdown for a key storage hub. But since the beginning of the trade war, it's really a different story between stocks and commodities. In white here, we're looking at the S&P 500. This goes back to the beginning of 2018, roughly around the time of the start of the trade war. And then in blue, we're looking at the Bloomberg Commodity Index. And we see at the beginning of that year, these two indexes basically tracked each other, two different segments of the risk asset silo. And then stocks took off until we had later that year the volatility. But commodities had already been leading down. As you can see, commodities have really never turned back up. This is we have stocks close to all-time highs, up about 15% over this time period. The commodity complex, since the beginning of the trade war, down about 11%. It's going to be interesting to see how this divergence potentially comes back together. At some point, it probably will. And Joe Perry, ForexAnalytix, thanks so much for taking the time to join us. And what do you think about that divergence? I feel as though we've talked about it before, and it hasn't come any closer together. In fact, as stocks go higher, it just widens.
Yeah, it's a real interesting chart because stocks believe that trade deals are going to get done, and the commodity markets are obviously more affected by that because of one of the agriculture that goes into the index, but they're moving lower and they are waiting for it to get done, down the line, hopefully by the end of the year, or maybe not.
So if a deal does get done, you think that we'll see the ags pop and then commodities will come back higher?
Well, there'll be more demand, so price should go higher.
Got it. So you want to take a look at, because you did used to trade currencies and futures, let's put them together and take a look at the Canadian dollar futures.
Sure. Well, this is the Canadian dollar. You typically see the Canadian dollar move with crude oil. So if you're taking a look at crude oil, we saw the last couple of days that it was down 5%. Today, though, it's up 3%, which is kind of natural because you would expect it to bounce a little bit after being down so much. So today we're looking at this. You could see that since 2017, it's been in this symmetrical triangle right here. And actually the 200-day moving average goes right through the middle. And it's not a surprise that it's coiling right here, right at the 200-day moving average. And it looks to break through one side or the other. And it may break lower from here, given that we have the resistance right above with that 200-day moving average right there.
Okay, so you are a seller of the Canadian dollar futures, and since you're saying that they trade in a similar fashion to oil, not surprisingly, you're also a seller of crude oil futures.
Right.
But what I'm stunned by, because the charts do appear bearish for 50, but you're saying we're going well below 50.
Right, well, if we take a look at this chart, you can see here from the beginning that we broke out of this inverse head and shoulders going back to last year. We went higher, and we retraced 61.8% of that level, and then we started moving lower again. Since then, we've moved sideways. Now, right here, when we had the drone attack on Saudi Aramco, we had the bid up, but they came right off, and they formed a flagpole for this eventual flag that we have right here. And it did break lower yesterday. Could be a fake lower, but it traded back in. We were down 5%, like I was saying. We're back with 3% today. You could enter lower looking down here for 46.5, and then you could put a stop somewhere up here above this top trend line, which would be probably around 58.5 or so.
So you're bearish on Canadian dollar futures, you're bearish on oil futures. Next time you're back, we may have to talk about lumber.
All right.
Joe Perry of ForexAnalytix.